It may seem simple, but the 52-week high-low, sometimes referred to as the 52-week range, is an important fundamental metric to understand volatility and appropriate target prices to purchase or sell your shares. The 52-week range is designated by the highest and lowest published price of a security over the past year. This fundamental metric can also be used to calculate the percentage off of the 52-week high or low, which explains where the current share price is relative to key events over the past 52 weeks. In order to calculate the percentage off, you're going to take the current share price and subtract it from either the 52-week high or the 52-week low, and then you're going to divide it by that same number, the 52-week high or 52-week low respectively, and then you're going to multiply by 100. As an example here, we're going to look at Annaly Capital Management, stock ticker NLY. They are a mortgage REIT that I just did a video about with a dividend yield of 10%. You can check that out. I'll link it in the description as well as throw it up on the screen. They currently have a share price of $8.32, and their 52-week range is a low of $3.51 with a high of $10.50. After looking at the 52-week high and low, you want to look at the 1-year chart to see that historic price movement and compare it to the current share price. Here is Annaly Capital Management's 1-year chart. You can see that their 52-week highs were at the beginning of the year, followed by the 52-week lows in March when the market crashed, and they've slowly been trickling up since. Here's an example of the percentage off calculation for Annaly Capital Management with the current share price of $8.32 and the 52-week high-low from the Yahoo Finance screenshot that we looked at seconds ago. You can see the percentage off from the 52-week high is minus 21%, and the percentage increase from the 52-week low is plus 137%. And if you look at this next screenshot here, it's the same chart, it's just showing you the formulas that we talked about earlier. You can see here in blue the current share price, $8.32, subtracted by the 52-week high of $10.50, and then it's divided again by that red box, the 52-week high, and multiplied by 100 to get it as a percentage. Once you know where the current share price is trading at in relation to the 52-week highs and lows, you should know that the stock is often trading at increased volume during these key points. A stock trading around its 52-week high price generally signifies that the stock is performing well, as there is little overhead resistance for the price to continue increasing. And from a fundamental standpoint, it should also mean that the company's earnings have been increasing in the past and should continue to increase in the future. On the other hand, when a stock is trading near its 52-week lows, it's generally targeted by multiple sell recommendations amongst analysts. Alongside this, during this period of time, it's often not purchased by fund managers, and a stock trading around its 52-week lows also foreshadows poor fundamentals in the future, but this should still be looked into further. The reason it's important to know the 52-week high value and the 52-week low value of the security that you were trading is because said security will be met with support from the 52-week low value and resistance from that 52-week high, generally keeping the share price bouncing around in between. Knowing this information can help you choose appropriate price targets when taking or exiting positions, and it can also give you a vague understanding of how a company has performed in the past. If you enjoyed the second segment of Fundamental Fridays, where we talk about a different fundamental metric each week, please subscribe to the channel and turn the notifications on. Don't forget to check back next week to further your fundamental analysis. As always, I'm Patrick Zimmerman. Thank you for your time, and have a nice day.